Welcome to Unit 4, Session 3. Our topic today is computation of capital allowances in a pool of Class 1, 2, or 3 assets. By the end of the session, you should be able to identify Class 1, 2, or 3 assets and compute the capital allowances of depreciable assets in Class 1, 2, or 3. Act 896 classifies depreciable assets into a pool of 5 classes. So we have 1, 2, 3, 4, and 5. For classes 1, 2, and 3, the reducing balance method of depreciation is allowed. And for 4 and 5, we use the straight line method. We are also told that classes 1, 2, and 3 uses the pooling system, or the assets are pooled together. With the pool system, the individual assets lose their identity. So we can only talk of the depreciable value of the pool and not the depreciable values of the individual assets in the pool. Depreciable assets are placed into separate pools for each class of assets, and capital allowance is granted for each pool for a year of assessment. The capital allowance for class 1, 2, or 3 depreciable assets for a basis period is computed using the formula A multiplied by B multiplied by C all over 365. A is the value of the pool, B is the depreciation rate, and C is the number of days in the basis period. With this one, we are talking about when the business began operations. The pool value is calculated by adding purchases during the year to the written down value at the end of the last basis period and deducting the sales proceeds from the results. So let us see how it is done using this example. K. Dewo has been in business for several years and keeps account to 31st December every year. He had the following assets as at 1st January 2019. Computers 7,000. Computer software 3,000. During the year to 31st December 2019, the following transactions in fixed assets took place. Bought 2 computers and printers, 10,000. Sold some old computers, 2,000. Compute the capital allowance for the basis period ending 31st December 2019 and 31st December 2020. So I'll go back again so we take notice of the question and then we can solve it. Okay, now let us look at the solution. We're told to compute capital allowance for the basis period ending 31st December 2019 and 31st December 2020. So we start with 2019. We're also told that he prepares accounts to 31st December every year. So it means that he uses 1st January to 31st December. So we have the name of the company and then business. We have the name of the company and computation of capital allowance. Okay, so we have our year of assessment here and our basis period. Okay, we have our Ghana cedis. So we're told that the written down value for computer was 7,000 and computer software was 3,000. And we said that class 1, 2, and 3 assets are pooled together. So the individual depreciable value is not seen, but the depreciable value of the pool. So we are going to add the 7,000 plus 3,000 to give us 10,000, and we are going to show only that 10,000. So we have written down value brought down, which is 10,000. Then during the year, we're told some transactions took place. He bought 2 computers and printers, 10,000. So that will be treated as additions. So 10,000, we are going to get 20,000. We're also told that he sold some computers for 2,000. So we have sales proceeds 2,000. So we are deducting. We have 18,000. And this 18,000 is the depreciable basis. Now we are going to compute capital allowance. And we said the formula is A times B times C over 365. So here we are going to get 18,000 multiplying the B is the rate, and you know computer is class 1 asset, so we have 40%, and we're told that he prepares accounts to 31st December. It means that the person operates from January to December, and we have 365 days all over 365. So this is going to give us 7200. And then when we less it, we're going to get a written down value of 10,800. So written down value carried down. Then we do for 2020. We have our year of assessment and our basis period. 31112 So we have our written down value brought down, which is 10,800. We had no additions in 2020. We had no sales in 2020. So our written down value becomes the same as our depreciable basis. So we compute capital allowance. So we have 1080 multiply 40%. We said on reducing balance method. So we are using the written down value. And this is going to give us 4320. When we deduct, we are going to get 6480. And this is the written down value. Okay, so that is it for this question. Please take note that with the computation of the number of days of the basis periods, that is for the C part of the formula, we concentrate on when the business started operations and not when the asset was purchased. So even if the asset was purchased in December and then the business started operations in January, that asset is going to enjoy full capital allowance. Please take note, because you can realize that from our example, we bought some assets in March and sold some in June, but we are still using 365 over 365. This is because the business started operations in 1st January and prepares accounts to 31st December. Let us look at another example. Nemo has been in business for some years. His accounting period is 1st January to 31st December every year. He had the following assets as at 31st December 2018. So we have motor van 200,000, forklift 150,000. During the year 2019, The following transactions in fixed assets took place. We have minibus 160,000, forklift 200,000. On 31st October 2019, he sold the old forklift for 110,000. Compute the capital allowance for the basis period ending 31st December 2019 and 31st December 2020. So let's go back. So you take notice of the question, then we can solve it. Okay, so we have K Nimo, the name of the business. And then we have computation of capital allowance. So we have our year of assessment, 19, 1st January 2019 to 31st December 2019. We have our CD sign. Please, it's very important to show these things. Marks are awarded. So we're told that the written down value for motor van was 200 and for forklift is 150. We know that motor van and forklift fall under class 2 and we are going to pull them together. So we are going to show only one figure. So 200 plus 150, we have 350,000. Then we have some additions. We bought forklift for 200,000 and minibus for 160. We're also going to put them together. We have 360,000. When we add, we have 710,000. Then we made some sales. We sold forklift for 110,000. So sales proceeds 110,000. When we less, we have 600,000, and this is our depreciable basis. Now we compute for capital allowance. Like we said, motor van forklift, they are class 2 assets. So we are going to get 600,000 times 30%. Also here, we are using 365 over 365 because we prepare accounts from 1st January to 31st December. So when we do this, we are going to get capital allowance of 180,000. When we deduct, we have a written down value of 20,000. So that's written down value carried down. Then we go to 2020. We have our year of assessment, then our basis period. Please, I hope you are following. So we bring our written down value from 19. We said it's done on reducing balance method. So we're going to compute capital allowance using the written down value. In 2020, we had no transaction. So we are going to simply compute for our capital allowance. So here we have 420,000 times 30% times 365 over 365. So it is giving us 126,123,000. So we're going to get 294,000. So that's our written down value at the end of 2020. So for 2019, we are enjoying capital allowance of 180,000 and for 2020, 126,000. Let us look at another example. T. Boedu's enterprise accounting period is 1st January to 31st December every year. He had the following assets as at 31st December 2020. Office furniture 40,000, office equipment 60,000. During the year 2021, the following transactions in fixed assets took place. We bought office furniture 30,000. We sold the old office furniture 15,000. We also bought new office equipment 50,000. We are supposed to compute the capital allowances for 2021 and 2022 assessment years. So let me go back. You look at the question again, and then we solve it. Okay. Hope you now have the question. Let us look at the solution. We have the name Tibuedu, then computation of capital allowance. We have our basis period, 1st January 2021 to 31st December 2021, and our year of assessment 2021. Written down value. Let's first bring our Ghana cedis. Written down value brought down, we were told office furniture 40,000, office equipment 60,000. This is class 3 assets, still using the pooling system. So we have to add 40 plus 60 to show 100,000. Then we're told during the year we did some purchases. We bought office furniture 30,000, and we also bought equipment 50,000. When we add these two, we are getting 80,000. So when we add it to the written down value, we have 180,000. We also made some sales. We sold an old furniture for 15,000. So we have 15,000. When we subtract, we are getting 165,000. This is our depreciable base. Now we compute capital allowance. Office equipment, office furniture, class 3 assets. So our formula, we have 165,000 times 20% times 365 over 365. That is giving us 33,000. When we subtract, it's giving us 132,000. So written down value carry down. Then we go to 2022 year of assessment. Our basis period, we have 1st January 2022 to 31st December 2022. We have our written down value brought down 132,000. We had no other transactions taking place in 2022. So we just go straight away to compute for our capital allowance. So we have 132,000 multiplying 20% times 365 over 365. And this is giving us 26400. When we subtract, we are going to get 105,600. That's our written down value at the end of 2022. So for 2021 year of assessment, we're going to enjoy capital allowance of 33,000, and for 2022 we have 26,400. Now let us look at an example where we have a lot of assets from different classes. Asante Enterprise accounting period is 1st January to 31st December every year. He had the following assets as at 31st December 2018. Motor van 250,000, office equipment 120,000, computer and accessories 140,000. During the year 2019, the following transactions in fixed assets took place. Bought 2 computers 50,000, sold an old computer 15,000, bought a minibus 340,000, sold a car 65,000, bought office furniture 80,000, all in 2019. Then in 2021 we bought printer for 10,000, then we bought fixtures and equipment 25,000. Compute the capital allowances for 2019, 2020, and 2021 year of assessment. Okay, so what is the class for motor van? Motor van's class is class 2, office equipment is class 3, and computer and accessories is class 1. Okay, so now we can go ahead to compute for capital allowance for the relevant years of assessment. I believe you have the questions now, and we can continue to compute for capital allowance. We have Asante and then computation of capital allowance for the relevant years of assessment. So we have our basis period and year of assessment. So we start with 2019 year of assessment, and the basis period we have 1st January 2019 to 31st December 2019. In this question, we have 3 classes. So we are going to have class 1, class 2, class 3, and then total. Please note that the total column is only for capital allowance for the period. So we are going to add all the capital allowances under the various classes and show the total at the total column. The total capital allowance is the amount that is allowed as deduction for tax purposes for that year of assessment. So let's start. Written down value brought down. Let's put the rate here. So class 1 we have 40%, class 2 30%, class 3 20%. And we also have to show Ghana cedis. Ghana cedis. So written down value brought down. For class 1, we have computer and accessories to be 140,000. For class 2, we had motor van, which gave us 250,000. And then class 3, we had office equipment, which gave us 120,000. Now let us look at the transactions that occurred during the year. So we have additions here. We bought 2 computers and we're told their price is 50,000 each. And computer is under class 1, so we place it here 100,000. We also bought a minibus for 340,000. We place it under class 2, 340,000. Please, I believe we are following. Then we bought office furniture, 80,000. We bought office furniture, 80,000. We are doing for 2019, so we are considering only transactions that occurred in 2019. So we have 80,000 here. So that's the transactions that took place in 2019 in terms of purchases or additions. So here we have 240,000. Here we have 590, and here we have 200. Now let us look at the deductions in terms of sales. We sold an old computer for 15,000. We also sold a car for 65,000. And in terms of class 3, no transaction took place. So we have dash here. Now let us look for our depreciable basis. So for class 1, we are going to get 225,000. For class 2, we have 525,000. And for class 3, we have 200,000. Now, let us look for our capital allowance. And we know the formula is A multiplying B multiplying C over 365. So in terms of class 1, you are going to punch on your calculator 225,000 multiplying 40% multiplying 365 over 365, and this is giving us 90,000. We do same for class 2. We have 525,000 multiplying 30% multiplying 365 over 365, and this is giving us 157,500. And for class 3, we have 200,000 times 20% times 365 over 365. And this is giving us 40,000. So we are going to add 90,000 plus 157,500 plus 40,000. And this is giving us 287,500. So in 2019, we are entitled to a capital allowance of 287,500. So we have to deduct the capital allowances from the depreciable basis to get our written down value at the end of the period. So for class 1, we are getting 135,000. For class 2, we have 367,500. For class 3, we have 160,000. So this is capital allowance for 2019 year of assessment. Let us look for 2020 year of assessment. So we have 2020 1st January 2020 to 31st December 2020. Okay, so we have our written down value brought down. So from 2019, we are transferring them to 2020. So for class 1, we had 135,000. For class 2, we had 367,500. And for class 3, we had 160,000. Now, during 2020, no transaction took place. So it means that our written down value is the same as our depreciable base. So we go ahead to compute for capital allowance. So for class 1, just like we did, we have 135,000 times 40% times 365 over 365, and this is giving us 54,000. For class 2, the same thing, we are going to get 110,250. For class 3, we are going to get 32,000. Now, when we add 54,000 plus 110,250 plus 32,000, we are going to get 196,250. So for 2020, our total capital allowance is 196,250. Okay, so let us deduct to get our written down value. So for class 1, we are getting 81,000. For class 2, we are getting 257,250. For class 3, we are getting 128,000. Now let us look for capital allowance for 2021 year of assessment. We have our basis period. So written down value brought down. For class 1, we have 81,000. Class 2, we have 257,250. And then class 3, we have 128,000. During 2019, some transactions took place. So we have additions. We bought a printer for 10,000 and printer falls under class 1. So we put it here. We also bought fixtures and equipment, 25,000. So we place it here, class 3. There was no transaction in terms of class 2 assets. So now we find our total. For class 1, we have 91,000 plus 257,250. And for class 3, we have 153,000. We had no sales either. So now this is our depreciable base. Now let us compute for capital allowance. Reducing balance method. So class 1, we are going to get 36400. For class 2, we are going to get 77125. For class 3, we are getting 30600. When we add these three figures, we are going to get 144175. Then now we deduct. written down value CD 56. So we're going to 54600. For class 2, we have 180075. And then for class 3, we have 30600. We have For class 3, sorry, we have 122400. Okay, so this is the solution. So for 2019, we had 287,500 for capital allowance. For 2020, we had 19620. For 2021, we had 144,175. Okay, so this is how you compute for capital allowance when you are given a lot of assets from different classes. Please note that you bringing the year of assessment is very important and the basis period. Also, bringing this here is very important. So, assuming we are marking this solution, you are going to get a tick for this, 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 this. You see, this is how we mark it. Then you have your depreciable base. You are going to get ticks for all these. Then capital allowance, you are likely to get 2 ticks. Then when we come here, we are only going to mark the capital allowance, get 2 ticks. And then here we are going to mark the additions, then we mark this ticks. So please take notes. So these things to sometimes carry marks. So please take notes of how this is marked. Sometimes to the name and then the heading, capital allowance for the relevant years can give you some marks. So please look at the presentation very well so that when you are given a question, you'll be able to solve it and present it well. Okay, so this brings us to the end of today's lesson. In today's lesson, we learned how to compute capital allowance for class 1, 2, and 3 assets. If you did not get some of the things treated in this session, kindly go back and watch the video again. Hope you enjoyed this session. Thank you.